Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Hello and welcome to this week's episode of Investor Intelligence, brought to you by the team at the Property Mentors. It's your weekly podcast for all things investment and hosted by me, Phoebe Sikowski-Wallace. So joining me back again today is our investment expert, Mr. Luke Harris. Happy Friday to you, Luke.
Happy Friday, Phoebe. How are you?
I'm very well, thank you. Now, Luke, investing in property is a big decision for most, and choosing the right location can be the key to achieving long-term financial success. However, Australia is a very big country and it's got many areas, it's got many suburbs to choose from. So it can be understandable that it's very overwhelming to determine which ones are sort of worth investing in. Luke, we're often asked that question of kind of where is the best place to buy or where are these hotspots? And now, of course, if you've listened to any of our episodes, you'll know that there are quite a few steps to go through before someone should start looking at which areas. This should always come after you've put a plan in place. Luke, first of all, is the question of where I should specifically buy or where are these hotspots, are they often brought to you as the first question that someone usually asks?
A lot of our members have the education first, so they're not coming to us looking for a hotspot as such. But there are a lot of people out there looking in the investment space to buy property, and they really do follow hotspots and they follow those trends to try and, I guess, chase the hotspots and chase maybe the upcoming hotspot to see if they can, cash in on some quick equity or some quick gains in the property market.
Yeah. Are you ever asked to the point where, someone's wanting to know like the address of a hotspot?
Well, often a hotspot will be a suburb or a pocket of a suburb, but generally known as a suburb or an area. Certain cities have been named as hotspots over the years, but generally it's narrowed down to a specific area like a suburb.
Yeah. So today I wanted to discuss that and sort of what goes into a suburb being more of a trending suburb for 2023 or, what we've said as a hotspot. So, Luke, what makes a suburb a hotspot?
There's a few factors that can make a suburb a hotspot. And I think the thing that we need to really think about here is investing in hotspots actually a good idea in the first instance? Now, what does a hotspot look like? Essentially, a hotspot is something where there is some increased sales activity, which is bringing it to the attention generally of the media of some description. So as you'll probably find it in property magazines and property websites talking about a particular suburb or a particular area. It might be on some property experts' radar saying this is going to be the upcoming hotspot or it's about to become a hotspot. But what makes it a hotspot typically is there's increased sales activity, and that usually gets underpinned by some infrastructure going into the area. There might be new schools or shops or train stations announced. There could be other infrastructure like hospitals and things nearby. And often what might happen is that an area has just been undervalued for a long time, and it's just decided that it's going to have a lot of growth in a short space of time. So a suburb might be sitting there under the radar for quite some time, undervalued, bit of an ugly duckling, as they say. And then within a short space of time, people realise that, and sales activity increases relatively quickly. The only reason people know something is a hotspot is by the noise that gets generated around it, right? Because the local real estate agents in Western Australia, for example, might be aware of a hotspot, and there might be a lot of increased sales activity. But it's usually when it gets picked up by the media or one of the property magazines or something like that it becomes a hotspot, and it gets officially named, I guess, a hotspot, and then more people jump on the bandwagon and I guess fuel the fire even more.
Yeah.
By looking to buy in those areas.
Okay, so increased sales activity, population growth, infrastructure projects. Can a hotspot be picked off, say, like capital growth versus like a cash flow hotspot?
Well, typically, looking at something like many years ago, people were investing in Western Australia and other mining towns, in mining towns in Western Australia and other mining towns around the country, including in Queensland, where people would go for the higher yield that's in an area because they saw that rents were going up. People jump into the market thinking the yield's going to be amazing. So therefore they pay even more for the price. More people hear about prices going up. They also hear about the good yields. So more people get into that market. And what it does is it just continues to fuel that hotspot. And to a certain extent, that's an artificial fueling of that hotspot because it was named a hotspot by a bunch of people.
Interesting.
And I guess the issue with that is that people forget about the underlying fundamentals of the actual property. And because somebody called it a hotspot, they just go in blind thinking, well, I'm buying in a hotspot area, so therefore it must be good. But we still need to make sure we're looking at the long-term fundamentals of any investment and making sure it fits our long-term plan.
So on the other side of that then, what does the wrong suburb look like? Or I don't even know what the opposite word of a hotspot is. Cold spot.
Could be a cooling off spot. I guess you could call it the wrong spot. And often the wrong suburb, I guess to answer the question, is probably something that's called a hotspot. Because generally, if it's called a hotspot, it means that it's general information, it's public information, everybody knows that it's a hotspot. Therefore, the actual growth that made it a hotspot has probably already happened. So by the time you hear about it being a hotspot, it's probably already happened and you've missed your chance. So making sure that you're not following trends. It might be a short-term trend. It might be something that's in the media. There might be a one-off announcement of some infrastructure which makes it a short-term hotspot. Doesn't necessarily make it a long-term investment that's going to work out for you as an individual. So I guess the wrong suburb is going to be something that is already named a hotspot. People are already jumping into that market and prices are increasing because it's a hotspot.
Can one suburb of a city grow while another in the same city fails? So, for example, sometimes we see that, Sydney might be getting hit harder, say, in comparison to Melbourne. But let's consider, Fitzroy and Collingwood, which are neighbouring suburbs in Melbourne. They're right next to each other, kind of to the point where not many people know where one starts and one ends. But could two suburbs so close have vastly different growth outcomes?
Absolutely. And it happens in every property market around the country right now. You've got neighbouring suburbs that are performing completely different. And the reason for that is that no two suburbs are exactly the same. Like you said, Collingwood, Fitzroy, they're very similar suburbs, but they do have different features and benefits. They do have their own, I guess, following. Some people want to live in Fitzroy. They don't want to live in Collingwood or vice versa. And it's just that, I guess, that perception that goes with being in a particular suburb. It's like being in South Yarra, Paran or Windsor along Chapel Street where our office is. People... They associate themselves with, I guess, the brand that goes with that suburb in these inner city locations. But I guess to answer the question, yes, different suburbs can grow at different rates, and there's reasons for certain suburbs having different growth rates. And often it can just be a psychological thing. People have an increase. There might be new bars and cafes in a particular area that open up, or there might be a new essentially a new hotspot, as in a new bar or cafe that opens up and it gets some media attention. That brings focus on that suburb again. And then more people think, I would love to be able to wake up on a Saturday morning and go to that cafe or go out to that bar or that restaurant at night time. And I might go and have a look at property in that area because, I'd like to live that lifestyle. And that brings extra attention on it, and that might assist some short-term growth. But some suburbs can have no change for a long period of time, no new developments, there's no new infrastructure, there's no real upgrades, and therefore a suburb can be stagnant for a period of time. And some of those can be good ones to look out for because they can be the ones that relatively sit there under the radar and don't really get much attention. And those ones really are probably the ones to be looking out for as being the next hotspot. But then picking that can be a very tricky task as well because it's very easy to get that wrong. You might assume something's a hotspot and it may not be. The neighbouring suburb might be performing really well and you think that obviously this one's been quiet for some time. There hasn't been much change in that suburb. Therefore, we haven't had much growth, and therefore it might be a hotspot. But then again, it might not be. So we just need to be mindful that chasing hotspots can be a very, very risky strategy as far as your investing strategy. And really, it is a little bit of a gamble, because trying to find the next hotspot or jumping onto an existing hotspot could cause some issues in your investing portfolio. So we've always got to focus on the fundamentals of the investment.
Okay, so the reason why an area can be a hotspot is sometimes actually based on artificial hype.
Absolutely. It's an emotional thing where a lot of people will get in. So, sophisticated investors might get on board early and they start investing in these areas and jump on, and they're in well and truly early to the investing cycle. And when people start seeing that growth, they get on board, they get on the bandwagon, and some of those early adopters might get some of that growth. But by the time it gets known as a hotspot, it's generally too late, because 75% of the growth that's going to happen in that mini boom that it has probably already happened. Now, it doesn't mean it's going to happen in every case. Sometimes you might jump onto a hotspot and that hotspot just keeps going for a lot longer than it was expected. And the Gold Coast is a perfect example of that right now. And people were saying, during COVID, property prices around the country were going to crash and it was going to become a big disaster. Obviously, with the relocation of people from capital cities to these, regional areas or these smaller cities, Gold Coast has been a perfect example of that, where prices have just skyrocketed and days on market are reducing and available properties are selling for a premium price. And people that jumped on that, some people are still riding that wave, but people getting into the market now in that particular market in the Gold Coast don't actually know how much longer it's got to go. And that's where there's a bit of a gamble, knowing whether is this going to continue for another year or two, or am I literally buying right at the peak of the cycle? And that's where the risk lies. So getting into an area early and capturing all of that growth is a much better way of investing.
So speaking of risks then, what are some of the risks of buying in the, I keep saying ROG suburb, but cool spot?
A cool spot. Well, buying, I would say the risk lies in buying in a hotspot, because you probably are paying too much for that property. I guess the flip side to that in buying in a cool spot area is maybe you've bought well and truly after it's a hotspot. If I pull out some of my old property magazines from 20 years ago, and I still have them all sitting there in the office, and some of them will name various hotspots, and they might have been hotspots 2 or 3 times since then. Neighbouring suburbs might have become hotspots, but again, a hotspot really is just a catchphrase that's used in the investment market, or in the property market, I should say, to really bring attention to a particular area. So it's probably not a good investment criteria to be looking at, but unfortunately a lot of people do. And a property hotspot seems to be the lingo that people like to use, saying I want to buy in a hotspot area, without really knowing what it means. And generally real estate agents don't, show you through a home and say this home is in a hotspot, you should buy it.
That's right.
So, it is generally the media that will pick up on these things and name it a hotspot. But the reason they're doing that is because there's already enough evidence and enough data there to show that it's increasing in value and that rents or yields are increasing, and therefore they can justify it being a hotspot. We've got to keep in mind that in every area, every suburb around the country, we're going to have diversity in that property market. So a hotspot might be the apartment market in a certain suburb, or the house and land market in a certain suburb, or the townhouse market in a certain suburb. So every area is different. It's going to have a mix of properties. It's going to be made up completely differently. And certain property types might be hot, but other property types in exactly the same suburb might not be as hot. So these are things that you've got to break down and consider to exactly what is driving a market to be a hotspot. Is it a new development? Is it infrastructure? Is it the fact that a suburb has been priced very low for a long period of time and it's just being discovered by a few people that are pushing prices up? Maybe there's a large sale that happens. So often you might have an older suburb that's been sleepy for a while, and there might be a large sale that happens. It might be a $5 or $10 million sale of a large piece of land, and that brings attention to the area because people haven't really discovered that area for a while. It hasn't been spoken about, it hasn't been in the media, and there hasn't been any large sales. But then developer might come in and buy a piece of land, and all of a sudden that brings attention. That attention highlights the fact that it's an affordable area, and then it sort of starts that cycle all over again. But that's happening at all different levels in every suburb around the country. So a hotspot could last for a week. It could last for 2 years. So trying to pick that can be a very difficult task.
Okay, I was going to ask if property type actually affects whether or not a suburb is a hotspot or not. Like, can an apartment in one suburb be a good investment while a house in the exact same suburb not be?
Well, yes, that could eventuate. But when we're looking at areas like the Gold Coast as a general rule, and as we've seen across a lot of our regional areas over the last couple of years since COVID, places like Byron Bay, the Gold Coast, Sunshine Coast, Airlie Beach, all of these sort of coastal towns, even in WA, Margaret River and places like that weren't as affected by COVID, but certainly on the East Coast, a lot of people have actually seen that. And places like the Gold Coast have got a diversified market, and essentially the Gold Coast itself has become a hotspot since COVID. Therefore, everything in that market seems to be selling for a premium. And that includes the high-end market just as much as it is the one-bedroom apartments. So in that scenario, a whole area can be a hotspot for a period of time. But only if it's called a hotspot. It might just be a rising market and just doing what it will normally do. So we're in a very unique situation at the moment where a lot of areas around the country have been called hotspots when they probably shouldn't be, because they're just doing what they normally do. They're going through their normal price growth cycle, and they'll have ups and downs. Certain properties will go up and down and sideways. But the reality is that it's not really a hotspot. It's just having its normal price growth.
Does the impact of buying in the right suburb change depending on whether you're pursuing a buy and hold strategy or a timing the market strategy, which is something we spoke about a couple of weeks ago on an episode?
Well, the impact is going to change on how you're buying. Yes, absolutely. If you buy the right property at the wrong time and you hold on to it for long enough, you can recover from any overvalued property that you pay. So if you buy into a hotspot area and you just happen to buy in at the wrong time and you've paid too much for it, if you hold it for 10 or 20 years, you'll probably recover from that and you'll still do okay. If you're trying to time the market to get in and get out, you've got to factor in, of course, your purchase costs. So you've got all of your legal costs, your stamp duty costs, and then, of course, you've got to sell that property. You've got your agent costs and then capital gains tax if you make a profit. So timing the market can be very risky, and especially if you're chasing hotspots. It's, if you think about a cat trying to chase a laser or something around the room, you can see you're just like a crazy person trying to chase the hotspot. Yeah. And there's no real investment fundamentals behind that. You're chasing a hotspot and hoping that you get it right. And I think there's a flip the coin situation on that, whether you're going to get it right or get it wrong. That's not really investing in my view. Long-term property investing works if you do it carefully. If you do it slow and steady, wins the race. But yes, the impact of buying the right suburb will change if you're looking at just trying to time the market and get in and get out at the right time.
If you want to know more about those strategies, we did release, as I said before, an episode a couple of weeks ago, and it was called Slow and Steady Always Wins the Race. So definitely look out for that one. But look, this all sounds like it's quite hard to navigate then if you don't have the right resources and if you shouldn't just be chasing hotspots, which sounds very tempting to do. But what is the best way to navigate this then?
Look, a lot of things are difficult in life. I mean, building a spaceship's probably difficult as well. But going through this process of trying to pick a hotspot and trying to get your investing right, it does take careful consideration. It takes planning and it takes the right structure to get the results that you're looking for. And a lot of people get started in property by hearing about it somewhere in the media or from friends or family that bought in a certain area and made some capital gains very quickly. But the reality is that doesn't mean that you can replicate it in every market. So yes, you might have bought a property one time and you bought a hotspot and you did well. That's fantastic and a big high five to you. But can you replicate that in any market? do you know how to pick that again? And can you build your entire strategy around that? And the answer for most people is no, I can't. I can't actually go and do that. And I think if you're looking at building a property portfolio similar to going to the gym, you're not going to go out there and do 2 gym sessions and all of a sudden you're as fit and healthy as you could ever be. You've got to do little bits at a time, like slow and steady.
That'd be great, wouldn't it?
Well, exactly. But building the progress that you've done, a lot of people try and cheat. They'll take drugs and, do other things that they can do to try and make it go faster. And a lot of property investors are no different. And they try and do things to try and fast track or shortcut their investment results. But investing is a long-term thing. It's not something that you can get in and get out and make quick dollars. And yes, there are people that do that, but most of those people don't have a tried and proven system that can be replicated in any market. And so this is what we want to make sure that people understand. If you want to go out there chasing hotspots, make sure that you understand the difference between investing and gambling.
Yeah.
Okay, because investing means that you've got a plan, you understand what you're doing, you've got the right team of people around you, and you know how every property that you purchase is going to help you achieve your long-term goals. If you don't understand that and you don't care about those things, then by all means go out there and chase the hotspots and see how it goes. But, I think you need to have more structure than that, and you need to understand the fundamentals of any investment and how it fits into your overall plan.
So, look, we've discussed that different suburbs can perform differently. As I said, Australia is a very big country, so some suburbs may be growing even if, the vast majority of them aren't. Are there any current hotspots that you've got your eye on at the moment, Luke?
Well, this is a good question. Hotspots that I'm involved in right now, I've been investing in, and we mentioned Airlie Beach before, I've been investing in Airlie Beach since 2017, and prices back then were very, very low. And the reason for that was that a lot of the regional areas around the country, I guess people had, beachside locations. People had holiday homes up in the Airlie Beach region, and up until the GFC, people were coming up here for holidays, and I say here because I'm up in Airlie Beach right now for those that are listening. And the market basically crashed after the GFC. A lot of people had holiday homes, they had big mortgages, interest rates were a lot higher back then. And one of the first things that they did, they had to sell their investment properties. Right? A lot of people had big margin loans and, on their shares in the stock market, they had to sell very quickly. And so a lot of people sold in this market for quite a discount to what they originally paid for it. And since the GFC, there hasn't been a huge amount of movement in the market. There hasn't been any new developments. There hasn't been any new stock come on the market. However, the population growth has slowly increased over that period of time since the GFC till about 2018. Now, I bought quite a few properties in this area over that last 5 years or so, and we've seen phenomenal growth in the last 5 years. So just as an example, 2017, 2018, a 4-bedroom house would sell for roughly $450,000 to $470,000. Just last week in this area, in the same suburb, a suburb called Cannonvale, we saw a house hit a new record for the suburb at $1,025,000. And so we've seen prices double over a 4 to 5 year period, and that's there's still more of that to come. So as far as a hotspot, I guess now it's become a hotspot, but the best time to invest was 4 or 5 years ago. There are still opportunities to create some good capital growth in areas like this. But obviously when we're looking, 2 or 3 years before it happens, that's the best time to be in there, especially if you're a retail buyer, buying something that's finished and ready to go. If you're actually building the property and creating that growth, that's going to help add some equity. But there are other opportunities around the country, and there's certainly areas that we're looking at, and we always factor these things in when we're looking at properties for our members. But we are chasing the fundamentals on a property first. First and foremost, we're looking at what's going to give it that long-term growth, what is going to give the best outcome for our members, get the best tax outcome, the best rental yield. Of course, we want to factor in capital growth, but we want to make sure that the property is sustainable in somebody's portfolio. We've got to make sure that they can afford it, the rental yields are correct, and get that right balance there. The vacancy rates are right so that we can factor in all of these things, and we're not just going out there chasing hotspots. So if we look at something and the fundamentals are there, then that in turn should give it the building blocks to become a hotspot at some point in the future.
Right.
But whether it gives us just a solid, steady capital growth or whether we get boom bust type growth is not really relevant because we're holding it for the long term and because we bought it for the right reasons in the first place, because the suburb and the property that we've purchased has good fundamentals. It's got good bones, like they say, and it's got a good reason to invest in it for the long term. If it becomes a hotspot, great, but we're not chasing it because it's going to be a hotspot.
Yeah, fantastic. So, look, anything else to add today with today's topic that you think would be valuable for everyone listening?
My advice, don't chase hotspots.
Yeah.
And a lot of people, and it took a little while to get to that point, but look, a lot of people chasing hotspots are really chasing what they're really looking for. If you drill down to it, they're looking for some fast money. And the reality is that the most successful investors in the country and in the world are patient, and they take a steady approach to their investing. They understand that it's long term, and they understand that to get the results, they're going to have to be patient with that. And they're trying to make a quick buck by picking a hotspot. Really could be a fool's game in the scheme of things, because you might get that wrong. Now, not to say that some people won't get it right, but do you really want to put all of your investment money into something that may not work out? Or would you prefer to put your money into something that you've got confidence that it does make sense as a long-term investment?
Well, I know which one I'd personally prefer. Anyway, thank you so much for your time today, Luke. You're always very generous with it. I hope that answers any questions that anyone had about this. And Luke, have yourself a great weekend. We'll see you soon.
Thanks, Phoebe. You too.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram @Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.